Big Plan vision is for you to lead a financially responsible life. For you to build a sustainable cash flow for life and beyond, Big Plan have established the 60-40 income to expenses ratio. On Big Plan previous video, Malaysian Joe fixed basic income plus benefit is 3,880 ringgit Malaysia per month, and his monthly budgeted expenses is 2,328 ringgit Malaysia, which is at his 60% mark. Now is how to track on a monthly basis to ensure Joe is progressing well as time progresses, and he is in line to build a sustainable cash flow for life and beyond. Joe have a bank account where he will receive his salary from his employer. Joe uses his account to pay for all his monthly expenses too. Besides the bank account, Joe holds a credit card where he will use it to pay for his daily cost of lifestyle. For example, entertainment, food, medical, clothing, and grocery, etc. Please note that the bank and credit card account are friction, and all transactions are created for illustration purpose only. With these accounts, tracking Joe's actual monthly cash flow against his budget or plan could not be easier. On a monthly basis, Joe will account for his total credit into the bank account, which should be his monthly working income upon receiving his monthly bank statement. His total debit from his account will comprise of his cash withdrawals or any online bank transfers, payment towards his credit card usage, bill payments, or loan repayment, etc. Your total debit from your account should omit any transaction made towards investment. For example, if you make an investment into your broker account to buy shares, you need to deduct the amount from your total debit. What you are accounting here is the total actual monthly expenses debited from your account only. Any other debits for other purpose should be omitted. If you hold multiple bank accounts, same practice will be taken upon receiving the bank statement during the same month. You have account for your working income and budgeted your monthly expenses. The main concern here is what you budgeted or planned for is actually happening when you update it against your bank statement. Whether more is spent on food or clothing is not material, as long as the overall actual spending are below the budgeted or planned amount. Unless you are consistently spending above your budget, then you may need to get into details and see where you can cut your expenses. Overall, your current actual monthly expenses should be around the 60% mark for a healthy and sustainable cash flow, leaving 40% to investment for your future consumption. Putting all this into your personal finance Excel spreadsheet. Create a new tab called CF for Cash Flow Actual. Label the column as Plan, Actual, Differences, Plus and Minus, and the month in the year. As this is the actual monthly cash flow, Joe started his personal finance spreadsheet in August this year. So he will start his monthly practice and account for his actual cash flow starting in September to the next August. This forms Joe's annual cash flow period, September to the following year, August. Getting the planned amount from the Input tab for income as well as expenses. For income, it will be yourself and your spouse if working and joint planning. On the actual month column, set the planned amount to each of the column month for income. As for expenses, each respective month need to match back to the budgeted amount in your expenses tab. You will overwrite the planned amount to actual when you receive your bank statement every month. At the same time, you will need to remember that your actual cash flow stands at the 60% mark for your income to expenses ratio. On a monthly basis, a portion of your cash flow will be channeled into investment for your future. Big Plan will set aside a role for investment here. Updating for your investment will be illustrated in Big Plan later video. With that, your net cash flow for the month will be your total working income minus your expenses and investment. And your cash position will be the accumulated net cash flow per month as time progresses. This cash position will be checked against your total bank closing balance for error checking. A zero amount means all transactions are accounted for as according to the bank, and this is the total cash position you have right now at the close of the month. Big Plan will illustrate Joe's monthly practice here when he receives his bank statement on the 19th of each month. Joe will update his bank account in his personal finance Excel spreadsheet, the bank, account number, and the statement date every month. The bank closing balance as of September month is 1,438 ringgit Malaysia. Next is Joe's total debit of 1,732.55 ringgit Malaysia, where he pays for number 1, credit card August statement of 900 ringgit and 75 cents. Number 2, 500 ringgit allowance transferred to his parent for September month. Number 3, 31 ringgit and 80 cents for his telco bill with Maxis. Number 4, 300 ringgit Malaysia cash withdrawal. All these transactions are related to expenses. Hence, Joe will override the planned amount of 2,328 ringgit Malaysia with the actual amount of 1,732 ringgit and 55 cents under the September expenses. A good practice here is to check off your monthly budget expenses as you make payment during the month. This to ensure all payments are made on time as scheduled. Next, the total credit into Joe's bank account is 3,070 ringgit and 55 cents, which is his net salary after deduction of EPF and SOCSO. EPF and SOCSO is Malaysia Mandatory Retirement Scheme and Social Security contribution per month. For EPF, it is an investment for Joe's retirement, where contribution is deducted from Joe's gross income and paid directly into the scheme by Joe's employer. Joe will update the amount of 728 under the investment row for September. As for SOCSO, it is under the expenses of 81 ringgit and 45 cents. Joe will have an ending net cash position of 1,438 ringgit Malaysia after accounting for his bank opening balance of 100 ringgit Malaysia as per his bank statement. This tied to his bank account closing balance, which means all the transactions are updated with zero error. You can repeat the same process for multiple bank accounts to arrive at your total actual monthly expenses. Let's review Joe's financial. On the actual column, take the average on the actual months progressed. Since September is the only actual month to date, Joe will have only a month average. As time progresses, he will have an actual average of 2 months, then 3, and so forth. Do the same for actual expenses. The actual average amount will fluctuate as the month progresses. When you update the planned amount to the actual and average it out over the past months. This is your tracking measure to see how well you are doing financially. Actual average amount minus plan. Joe is doing well in his September financial. Total actual month expenses are 1,814 ringgit Malaysia, which is 514 ringgit Malaysia below budget expenses, keeping it at 47% of income to expenses ratio. Are you above or below your planned amount? An additional note on credit card usage. Big Plan assumes that your credit card balance is paid off every month as per statement with zero credit carry forward. You can update your credit card statement here when you receive your statement. This is to assist you when to make a payment and the amount to pay. This is how Big Plan tracks your actual monthly cash flow to your planned amount. If you are consistently running above the budgeted amount, you may need to revisit your budget expenses and find out why. This is your personal finance Excel spreadsheet for your monthly practice on your actual cash flow. Thank you for watching. Please like, comment, follow, and subscribe to Big Plan today and lead a financially responsible life.